Hey, and welcome to another video here on Fiscal Voyage. My name is Felix, and today we're going to talk about Coca-Cola stock. I did a stock analysis on Coca-Cola on January 2018, and since then, the stock has been up roughly 18%, excluding dividends. However, I did recommend it a hold at that video, but since it's up 18%, let's see what my stock analysis says. If it's still a hold, buy, or sell in this 5 minute stock analysis. All right, so here's the 5 minute stock analysis of Coca-Cola. It could be found in the stock exchange as KO. I'm sure you guys heard of Coca-Cola. Coca-Cola is an American multinational corporation and manufacturer, retailer, and marketer of non-alcoholic beverage concentrates and syrups. The company is best known for its flagship product, of course, Coca-Cola, which was invented in 1886. Let's look at some fundamentals over the past 10 years, starting from 2009 to 2018. As you can see, revenue grew at a very disappointing rate of 0.31%. Net income, even worse, at negative 0.65% from that same time period. However, they do have a good credit rating of A plus from S&P Standard & Poor. Their operating income from that same time period has only grown 1.48%. Sorry about that. Earnings per share grew at a rate of 1.88%, which is not great at all. You like to see earnings growth at least very minimum at the rate of inflation. And even a bad story is the 5 year revenue average, which is negative 7.43%, and net income in this 5 year average is also negative 0.60%. So our net income and revenue has been decreasing over the past 5 years, as well as earnings, negative 4.62% average. Last year, Coca-Cola earned adjusted earnings of $2.08. Net margin came in at 20.20%, and debt to cap currently at 47%. They currently have a dividend yield at 2.93, which is slightly lower than the 5 year dividend yield average of 3.2. Basically, almost fairly right at that point. They do have a pretty high dividend payout ratio of 77.4%. However, they've been growing dividends for 57 years consecutively, so that's been outstanding. A lot of people that own this company own it because of the dividend growth. However, the 5 year dividend growth rate is only at 6.85%, and actually this year they only increased it by 2.6%, which is at the rate of inflation or maybe even lower. The company currently has a charter rule of 9.78. We like to see companies of 12 or higher, which is the current dividend yield plus the 5 year dividend growth rate. Let's look at what analysts expect coming out this year and next year. Earnings are expected to be at $2.11 versus 2018, which was $2.08, which is higher than last year. In 2020, to a nice improvement of $2.29. CFRA projects a 3 year earnings growth of 6%, so it's better than the past 5 year average. Currently, however, the forward PE is at 24 versus the 5 year PE average of 21.66, and currently they have a PE of 25.9, which is pretty high. I like to see companies lower than 20, preferably around the 15 PE multiple. Let's look at the fast graphs. So you can see here, the black line represents the monthly closing price, the blue is the normal PE, and the orange the earnings PE. As you can see here, the black is way higher than the blue and orange. For this company, I would look at the blue line as the fair value estimate. As you can see here, it's much higher than the blue line, the monthly closing price. Let's see the current fair value price. CFRA at $40.91. Morningstar 53. Fast graphs, as you saw in the previous slide, 43.86. And averaging out the 5, we get a fair value price of $44.75. And currently, the company is being sold at $53.87, which means the company is overvalued by 16.9%. Normally, at a high overvaluation, I would recommend a sell, but because Coca-Cola has been increasing dividends for so many years, and it looks like they're going to continue going, at least for the foreseeable future, I currently hold Coca-Cola in my portfolio, and I'm currently holding. I'm not buying or selling Coca-Cola. I recommend a hold. That's what I'm currently doing with my position. Um, I have a nice gain on Coca-Cola. My yield on cost is over 4%. So right now I'm just holding and just taking in the dividends and uh, using the money that comes in from Coca-Cola to buy other company shares. I do like the company. They make a lot of different beverages. I'm sure you guys are aware of some of their products. But with that, I recommend it as hold. The company is very overvalued. 25 times earnings versus their average. And so with that, I recommend the hold. And so tell me what you think of the company. Are you buying or selling or doing the same as I am, which is holding? If you have a company you would like to see next, please leave a comment below. And make sure to like the video. And thank you for watching. And you find this video informative, make sure to hit the like button and subscribe to my channel. And make sure to check out my portfolio page of my website, which is in the description link, and at fiscalvoice.com. So thanks guys, and have a great day.